Hello viewers, welcome back to my YouTube channel. If today is your first time chancing on this channel, make sure you subscribe, like, share and comment your opinion with us in the comment section. Now today we are here to look at accounting for value added tax. So when we say VAT, what does it mean? VAT is a general consumption tax imposed on the cost incurred on goods and services. Now this is the whole concept behind value added tax. Let's see how we can appreciate that into calculation as so far as accounting is concerned. Now we say a wholesaler buy goods from a manufacturer at 200 Ghana cedis, including VAT of 15%, and then the wholesaler sold the goods to a retailer at 250 cedis, including VAT of 15%. Now we are asked to calculate for input VAT and then output VAT. Now we say input VAT is the VAT percentage over 100% times cost incurred on payment. This give us what the VAT tax in the question is 15% of input VAT. So we have 15% of what? Over 100 times the cost incurred on payment, which is 200 Ghana cedis. We have 200 here. So this will now give you what? 2 times 50 will now give you what? 30 Ghana cedis. So therefore our VAT input is 30 Ghana cedis. And then we are asked to find for output VAT as well. So let's find for output VAT. So we have output VAT, which is VAT percentage over 100 times amount of goods sold. So now we have the VAT percentage to be what? 15. So we have 15%, 15 over 100 times the amount of goods sold. So the amount is 250 cedis. So we have 200. This now gives so this will now give 45 Ghana cedis. So this is the whole computation of VAT input and then VAT output in the accounting of value added tax. Now let's look at the entries for the VAT or for the value added tax. Now we are saying in double entry we have how we debit and then credit account. In VAT we have how we debit and credit account as well. So let's look at the entries. We said where VAT is paid on purchases. That means when you purchase and you make payment and there is VAT inclusive, how do we enter the entries into the account? Now what do? We debit purchases account with the cost excluding VAT. That means when you make purchases of goods, you debit the purchases account with the amount involved. So if you purchase goods for, let's say, Ghana cedis, 600 Ghana cedis, and then VAT equals 20, then the total amount is 620 Ghana cedis. What we do here is that we debit the purchases account with 600 cedis. So this could be our purchases account. We have purchases here, purchases account. Now we debit the purchases account with the actual amount involved, which is 600 cedis of the goods. So we have our purchases here. So we have 600. We debit the purchases account with the amount involved, which is 600 cedis. And then what else do? We debit VAT account with the VAT on purchases. So this is our VAT account This is our VAT account. What do we do? We debit VAT account. We debit VAT account with the VAT on purchases. This is the VAT amount on purchases. So what do we do? We debit VAT account with the 20 Ghana cedis on purchases. And then the third thing we are supposed to do is we credit the creditors or cash book with cost including VAT. So this is our cash book. This is our cash book. Cash book. Or we can also say this is our creditors account, either our creditors or cash book. So we do what? We credit the cash book. We credit the cash book with the total amount of the goods. So we have our 620 at the credit side of the cash book. So this is how we enter the entries in the account when there is a what? A purchases or a purchase made. And then the second thing is where VAT is charged on sales. That means when we make sales or when we sell goods to our customers and then we charge VAT on it. That's output VAT. Sorry, output VAT. We have what? We debit the debtors or cash book with what? Our sales price including VAT. So let's take this to be our cash book and then or let's say our debtors account. What do? We debit it, right? We debit it with the amount. So we sold goods at 700 Ghana cedis, and then let's say this is our VAT. So VAT, this is our VAT. We have VAT of 50, and then the total amount will be what? 750 Ghana cedis, right? What we do here is that we debit the cash book. We debit the cash book with the total amount, which is 750 Ghana cedis. And then we credit VAT with the VAT amount. So the VAT amount that imposed on the goods we sold is what? 50 cedis. So we credit VAT with 50. And then what we do? We credit sales account with sales price excluding VAT. So we have sales. So we have sales account. We have sales account here. So we have sales account. We credit sales account with the sales amount, which is the 700 cedis. So this is what we have here. Now, when there is where the payment of VAT is done, that's when output VAT exceeds input VAT. That means the VAT imposed on the goods sold is higher than the VAT imposed on the goods bought from our manufacturers. So what do? We debit VAT account. So the difference. So here is the example we gave. This is input VAT and then this is what? Output VAT. What's the difference? 50 minus 20. We have difference of 30. So what do? The 30 is the VAT. So we debit the VAT account. When there is an output exceeds input, we debit what? The VAT account with the amount. So we debit the VAT account with that particular amount when it exceeds input. So we debit VAT account and then we credit our what? Our cash book with the amount owing on VAT. So the amount owing, that means the 30 cedis that exceeded the input, we've not sent it to the Ghana Revenue Authority or where we are supposed to pay our tax. So that 30 cedis, we credit it to our cash book. So we have what? 30. So we debit VAT account and then we credit the cash book. Also, where VAT is received, that's if input VAT exceeds output VAT, we debit our cash book. We debit our cash book. So here we will have to go into our cash book and then debit it with the amount, and then as well we credit our VAT account with what? The amount received on VAT. So when we credit, that means we'll be able to pay that amount to what? To the Ghana Revenue Authority. So that's what we mean here. Now let's take a critical look at this example. What do we have? We have XYZ Limited purchases and sales analysis has shown the following data for the month of January, right? Now we have purchases and it's indicated that all is on credit. So whatever things we purchase, it's on credit. We didn't make payment for it, but then we took the goods on credit. And then we also made sales, which is on credit. We sold to our debtors, right? We sold to our customers, but then did not pay, right? Now we have the net amount. That means how much we bought the goods. We bought the goods for 42,500, and then we have the VAT imposed on the goods bought as what? 7,500 cedis. Now the total amount we are supposed to pay is what? 50,000 Ghana cedis. And then we made sales of 63,750, and then we imposed 11,250 Ghana cedis VAT on the sales we made. And then we have the total to what? 75,000. So we are required to prepare relevant ledger account to record the above transactions. Now let's prepare account for MSC. Since there is purchase that was made, we are supposed to have what? Our purchases account. We have our purchases account. Purchases account. And then we purchased goods, but then we did not pay, so it's on credit. So since we bought from people and we didn't pay, then we have our creditors to us. So we have our creditors account as well. So we have creditors account. Also, we made sales. So since we've made sales, we have sales account, and then we sold the goods to our customers on credit. So we will also have what? A debtors account involved. So we have sales and debtors account. So we have sales account. We have sales account. And then debtors account. We have our debtors account as well. Now let's record the items in the account we prepared. Now we have the sales, the purchases amount to what? 42,500. So we purchase, we are supposed to what? Debit our purchases with what? 42,500 Ghana cedis. So we have 42,500. And then we said for every debit entry there must be a corresponding credit entry. So we have what? 42,500 in the creditors account as well. So also we have our what? Our VAT amount to what? 7,500. So that's the total amount we paid to creditors. So this 7,500 is also supposed to show in the creditors account, because that's the total amount we are supposed to pay to what? To our creditors. So we have 7,500 here. So the narration will be what? VAT. We have VAT, and then this one we have purchases, and then we have our creditors here. So this is what we've recorded, or what we have for the first purchase we made. Now let's move on to the sales. We have our sales amount to what? 63,750. So we have to credit sales with the amount 63,750. And then the narration will now be what? Our debtors. So the corresponding of the credit is debit in the debtors account. So we have what? 63,750, which is sales account. Now the total amount we sold the goods was 75,000. So and then we imposed the VAT of what? 11,250. So we are supposed to add this to what? Our debtors account. So now let's prepare the actual VAT account, and then we know the amount that we are supposed to pay to the Ghana Revenue Authority as VAT for the organization. Now we have our VAT account. So in our VAT account, we are supposed to enter the information from here. So in our purchases account, we have 7,500 in the creditors account. So if at the credit side of the creditors account we have 7,500, we say for every credit entry there must be a corresponding debit entry. So the 7,500 in the creditors account as debit, as credit, we are supposed to enter it in the corresponding account as what? A debit figure here. So we have what? Creditors. And then the amount is what? 7,500. Also, in the debtors account, we have 11,250 at the debit side of the debtors account as VAT. So for every debit entry, there must be a corresponding credit entry. So we are supposed to enter the 11,250 as a credit entry in the VAT account. So we have our debtors here as well. We have debtors, which is 11,250 Ghana cedis. Now let's balance off the account and then see how much you are supposed to pay or how much you are supposed to receive if we paid VAT more than we are supposed to pay. Now we have 7,500 and 11,250 here. We say if we are closing an account, we check both sides, and then the greater side of the account, we take that to be the total. So since 11,250 is greater than 7,500, this will now be our total for both sides. So we have what? 11,250. And then at the same time we have 11,250 here. Now let's find the difference between 11,250 and 7,500. What's the difference? We have 11,250, and the difference will now be what? 7,500. When we find the difference, what is it going to give us? 0,573. So now we have 3,750 Ghana cedis as our difference. So now we say here, we write the difference here so that we add it to the creditors to get the total. So we write the difference here, add it to the difference in order to get the total we got from the account. So we have the balance carried down to the year, which is 3,750, right? And then we write the balance carried down here. So we have our balance brought down. So balance brought down to be here, which is also 3,750. Please have it. So since the difference is here, the balance brought down is here, that means we are supposed to what? Pay this 3,750 to the Ghana Revenue Authority as VAT imposed on the goods we sold. Okay, so now let's look at how we'll be able to compute our VAT returns as a VAT registered person. Because as a VAT registered person, you are supposed to know your VAT returns every month on sales and then what? Purchases made. So now we say we have our output VAT, lessen our input VAT, and then we know our amount paid or amount received as VAT. So let's reference the information here. So we have our 11,250 as input VAT, and then we have 7,500 as what? Input VAT. So these as output, and then we have 7,500 as input. So let's put it in the what? Illustration, and let's, so we have output VAT. So we have our output VAT to be what? To be 11,250 Ghana cedis. So we have 11,250 Ghana cedis. And then we say let's input VAT. Let's input VAT, which is 7,500. Which is 7,500 Ghana cedis. So what do we have? When we let this from this, what we have? We have our 3,750 Ghana cedis as what? As amount paid. Amount paid or received. So this is what we have when we compute our what? Our VAT returns in the month of January, as shown in the what? In the illustration. So this is how we are supposed to what? Compute our VAT returns. From the information given, this is how we compute our VAT returns. So now viewers, this will be the end to what? Accounting for value added tax. Please don't forget to subscribe, share, and then share your and then comment your thoughts with us in the comment section. Thank you for watching.